What if I told you that while most of your altcoin portfolio was bleeding out, some tokens quietly posted gains of nearly 24% in a single week? We are not talking about luck, we are talking about narrative. And if you don't understand how narrative drives crypto markets right now, you are already behind. Let's set the scene. Meme coins like PEPE, DOGE, and Trump, the crowd favorites, the culture coins, the ones your cousin texted you about, led the losses last week. Meanwhile, tokens tied to AI and privacy like Morpho up 23.5% and ZEC up 19% over 7 days quietly outperformed. Like the quiet kid acing the exam, everyone else failed. So what is actually happening here? And why does it keep happening in cycles that feel new every single time? The short answer is that crypto is no longer one market. It is dozens of micro-narratives competing for the same pool of capital, and right now, the capital is choosing stories it can defend at a dinner party. Think of Bitcoin dominance like a tide when it rises. Sitting at 57.4 to 60.1% recently, the water pulls away from altcoins and floods back into Bitcoin as a safe harbor. When that tide goes out, capital rotates into alts, but it does not rotate evenly. It chases whatever story feels most justified, most institutional, most next. The AI narrative has real tailwinds: institutional interest, real-world utility conversations, and the cultural obsession with artificial intelligence spilling over from every other industry into crypto. Privacy tokens like ZEC benefit from a separate but equally powerful storyline regulatory pressure globally, making financial privacy feel less like paranoia and more like a product feature. Now here is where it gets ironic and a little absurd. ZRO actually slipped after corporate partnership news dropped. You would think good news equals green candle, right? But the market had already priced in the optimism. And when reality arrived, it was slightly less cinematic than the rumor welcome to the buy the rumor, sell the news trap that has been springing on investors since before most of these tokens existed. This is not unique to crypto. It is the oldest behavioral pattern in markets, what economists call reflexivity, where the expectation of a thing changes the price before the thing even happens. George Soros built a fortune on this idea, and crypto traders keep rediscovering it the expensive way every single cycle. Historically, every bull run has had its narrative darlings. In 2017, it was ICOs. In 2020, it was DeFi. In 2021, it was NFTs and the metaverse. Now in this cycle, AI and privacy infrastructure are wearing the crown. And the question you have to ask is whether Morpho's 23.5% move is a signal or a squeeze. Here's a framework worth tattooing somewhere useful. Ask yourself 3 questions about any token move. Is there a fundamental catalyst, like real adoption, revenue, or utility? Is there an institutional or ETF flow story supporting it? Or is this purely speculative momentum that evaporates the moment the narrative shifts? If you cannot answer at least 2 of those with confidence, you are not investing, you are vibing with leverage. A common misconception is that Bitcoin dominance rising means altcoins are dead. What it actually means is that capital is consolidating before it rotates, and the tokens that survive that consolidation with narratives intact are the ones that tend to lead the next leg up. Not all alts are created equal during a dominance cycle, and treating them as one trade is how you catch the falling knives. The practical lesson history keeps teaching us is simple. Position size saves portfolios more than conviction does. You can be right about a narrative and still blow up your account by over-allocating. Ask anyone who was early on the metaverse thesis in 2021 and bet the house on mana. Discipline means you have a predefined reason to enter, a price where you are wrong, and a size that lets you sleep at night. Unemotional strategy is not about being cold. It is about building a process so that when PEPE drops 40% in a week, your portfolio doesn't follow it off a cliff because you sized in based on a tweet. What this week's divergence is really telling us is that the market is maturing enough to discriminate not perfectly, not fairly, but increasingly based on story quality. Meme coins thrive in euphoria and bleed in consolidation, while infrastructure and utility narratives hold up better when sentiment is cautious because they have a defensible why. Here is the philosophical gut check. You do not need to catch every winner to build wealth in this space. You need to avoid catastrophic losses and stay in the game long enough for your best ideas to compound. Consistency and sizing are the unsexy superpower that most people trade away chasing the next 100x meme coin. Whether Morpho continues its run or gives it all back next week honestly matters less than whether your framework for evaluating it is sound. If you built a rational thesis, sized it appropriately, and set your exit conditions before you entered, you have already won the process game regardless of the outcome. The irony of crypto is that the people most obsessed with finding the next big narrative are often the least prepared when it arrives. Build the system first, then let the narratives come to you, because they always do, in waves. And the prepared investor is the one already positioned when the tide turns. Check our links in the description below. Whether you are looking to get started in real estate investing, need home contracting work, or want to connect with trusted lenders, we can help you take that next step.